to me is how much publicity this particular book has got in the last week or so. And it's about humor in the workplace. And my God, we've all been suffering in the pandemic. If you can't do things with a smile, I might suggest you go and do something else. So what does this feel like for you as a leader? Yes, it comes with vulnerability. You cannot be expected to know it all. So please lean on those trusted advisors that are around you and make sense of what leadership and your business is going to look like going forward. It's going to be a very different blend of virtual and face-to-face. And please do keep that sense of humor. The R in our Thrive is about return. It's about return to profitable revenues very quickly. It's about making really good decisions on a return on investment and enhanced cash flow basis. If you're making decisions on an ROI and enhanced cash flow basis, you are going to drive value in your business. It will pull through cash and profit and sales and all of those other good things. I want to use this slide to also talk about the right return to the capital structure of the business. It is clear there is a wall of funding out there. That was the case before the pandemic. It is certainly the case now. There is so much finance and so much funding that is available. There are very few companies out there that are ready to attract the right type of finance. The real message from this slide is your ability as a business leader to understand the current state of your business, not only as it's perceived by you, but also by those potential funders, investors, and acquirers. And then start to think about the future state of your business in line with your life goals. It's then about matching your funding need to what your business needs. So 10 tips that I've listed out there. I don't intend to go through them all. There's some good reading for you here, but it's really about matching your funding need with the funding that is out there. That absolutely should be driven by your strategy, and it should be driven by your purpose. But be clear, funders and investors will expect you to have a robust business plan. They will expect you to know the story and numbers, cash flow, profit and loss balance sheet for the next 3 years. They will expect your business to be relevant and something that clients will pay for. So your value proposition is important, and that must again be stated with clarity. Think about how much money you want and think about the time over which you want to deploy that. The funding market is incredibly active. We are working on transactions that are anything from £20,000 through to £25 million. There are many, many businesses out there that are now seeking funding for progressive reasons and not just survival. But this is a good time to talk about the recovery loan scheme that the government have put out there. It runs to the 31st of December this year, and it's available to UK businesses, any business that really has been adversely affected by the pandemic, which is probably all of us. It doesn't include things like banks, building societies, public sector bodies and state-funded schools, but pretty well everybody else is eligible. Some critical things that you need to know. Term loans or overdrafts from £25,001 through to 10 million, repayable over 3 years. Invoice or asset finance between 1 million and 10 million, repayable over 6 years. Personal guarantees will not be taken out on the first 250k, and your principal residence will not be taken as security. So the recovery loan scheme replaces bounce back and it replaces CBILS. It is available now, and it's very, very accessible. Go to the British Bank, go to the government website, and you'll find providers. Talk to Mike, Jason and us, and we'll take you into that broker market. The reason the recovery loan scheme is important is as you set the right funding capital structure for your business going forward, it's likely to be a blend of a lot of different things. There are many sources of that funding and there are many different types of funding, but I would guess that recovery loan scheme will at least be a part of whatever program you put together. So it's well worth knowing about. It's accessible, it's good money, you've just got to match it to your business needs. So think about return on investment, return to revenue with profit, and return to getting the right funding structure. If you get that funding structure right, your business can absolutely fly in this marketplace. Think about all of those businesses that started during tough times in the Depression. One small example for you, Porsche Motor Cars. The I in our Thrive equation thinks about innovation, and technology. And technology over the past 18 months or so, in my mind, has really evolved. We are users of Microsoft 365 example on any device, anywhere, any place is now an office for us. We can access the information that we need on the move. It's secure, it's protected, it's backed up, and it hits one of the top 3 risks that we're ever going to see as business leaders, and that is the changing world of cyber security. What this slide thinks about is digital transformation, and it thinks about 6 building blocks. But I will emphasize there are very few businesses out there that actually need that kind of digital transformation, or in fact are in that transformation space. We have one client in that space. They're into data analytics. As a startup, their first year was 380k, second year £1 million, third year they're now tracking £9 million turnover at some 7 million EBITDA. They are truly digital, they are truly transformational. For most of us, it's about this technology enabling what we need to do. So, do we understand, for example, the emerging trends of artificial intelligence and the Internet of Things? And what does that mean for our business? Do we understand digital? Do we understand social? A few examples for you. In the accountancy sector, technology has been a massive disruptor. Artificial intelligence, Internet of Things, self-serve platforms like Xero, like QuickBooks. We can do so much more ourselves. We can also outsource cheaply, and we can offshore cheaply. That technology disruptor is changing the accountant's revenue model forever. So they are looking at different ways of engaging their clients as they go forward, which probably stretches beyond the traditional and audit compliance type services. What has that meant for the accountancy sector? It's also led to a lot of consolidation. So there are big consolidators out there that are buying groups of accountants and bringing them together. It's also meant then that the accountants are looking for different ways to engage their client bank through different collaborations and a different way of adding value. So technology is not necessarily being at the leading edge or bleeding edge, it was described. It's about what makes sense for you. And the question you should really ask is, are you technology enabled? Does it work to enhance your customer journey? Does it work to enhance your proposition? Is it helping your strategy and plan be implemented, and perhaps in an accelerated way? Let me give you 2 small examples of that. We work with a talent management business in the education sector. Over the past 18 months, they have transitioned their business to be much more of a platform base. They've got a lot of data, a lot of information, a lot of learning skills, a lot of learning tools, and they also recruit and select and grow businesses. That platform then is the platform that is going to drive growth. Here's the business that 18 months ago was really struggling with its cash flow. As we sit today, they've just received an offer for £10 million for around 24% stake in that business, and they're building a business that's going to run into 12 to 15 million EBITDA over the next 3 or 4 years, and that technology platform is absolutely the catalyst for that. Another very simple example, I'm not sure if you're watching this Moneymakers program on Channel 4 at the moment, but if you watch the one about the bread business, you'll see how they've leveraged social media to dramatically drive up their direct-to-consumer business versus the traditional wholesale business, which was massively impacted. So a nice little example of a pivot there. We work with the jewelers, a very high-end jewelers in the West End of London. Coming into the first lockdown, just 5% of their business was transacted online. Coming out of the lockdown, we are now through 25, 30% of business being done online. It's significant for that jeweler when you think an entry-level watch might cost you £9,600. And I tried one on Saturday. I'm not buying, by the way, Mike. It was £300,000 for this watch, very blingy, very diamond. They are doing high-end, tens of thousands, hundreds of thousands of pounds of transactions online and over the phone in a way that they didn't perceive before this pandemic. So think about innovation. The technology works. We're much more fluent now on platforms like this. Is your business technology enabled? Are you better automated? Are you more efficient? Are you able to spend more of your time using this technology where your value truly lies? The V for us is velocity. We love pace. We love speed. In the SME world, we think this is a massive, massive differentiator. Act now with pace, keep that impetus going, and you can make great things in your business in any market, but particularly this market when there is so much uncertainty and volatility out there. To illustrate the point about velocity, look at this company, Langstone Engineering. They're one of our clients. This is how they looked in September of last year. They are a precision engineering business. They are absolutely fantastic. I can tell you, they supply Ineos in their bid for the America's Cup. They supply 7 Formula One teams. You wouldn't necessarily get that from that brand and logo. This is what Langstone looks like now. More importantly, in September of last year, they thought they had a business that was worth about £3 million, and they were wrestling with it because of the ill health of the MD. Langstone Engineering sold in April last month, and I can tell you they sold way more than £3 million. That MD now has a very different perspective and a different role. He also has a much healthier bank account that the good guys of SJP are helping him invest wisely. But this is now a very different business. From curiosity in August of last year, starting in September, this just sold. That MD is now locked in for the next 4 years. He has 4 more stage payments. He has a very well remunerated role. They now sit in a group of engineering businesses that is private equity owned, and they are really driving forward. I cannot urge you enough to take a step back, assess your life goals. Again, sit with Mike and the team. What are your life goals? What does your personal asset base look like in terms of that cash flow projection going forward? And how can we help you grow your business asset? Sometimes that will mean growth and just creating more value for you. Sometimes you want to realize that in terms of a full exit or a partial exit, or even constructing a management buyout. Management buyouts can be constructed within 12 weeks. They will enable you to take advantage of the favorable business asset disposal relief as it exists today, but the speculation should suggest that this will be changed significantly come the autumn budget. So acting now, starting to work on your business, getting a sense with the guys at Bellamy Wealth Management of your personal asset base in line with those life goals. What does the business asset need to do with you? If you can act quickly, if you can act effectively, if you can keep that impetus up, there is no reason why you can't enjoy the same outcome as our friends at Langstone have done. For us, that starts with a plan, and now is a really good time to start that plan for you.